In this video, I'm going to give you a comprehensive breakdown of what the best ETFs are on Wealthsimple in each of these 7 categories. And this is Mia, and she'll be along for the ride. Now, for starters, I'm eliminating all of the ETFs that trade in the US markets and in US dollars, because unless you pay for Wealthsimple Premium, then Wealthsimple is going to charge you a 1.5% exchange rate fee to buy and sell stocks and ETFs in US dollars. And losing 1.5% right off the bat feels bad. But as you'll see in a second, there's easy ways to get exposure to the US market in Wealthsimple without actually having to buy US dollar ETFs. All right, so category number 1 is the simple, easy autopilot investing strategy of the one ETF portfolio. And really what this is one single ETF that serves as a catch-all because it invests not only in one different market or one different sector, but all around the world in all kinds of different companies of all different sizes. Now, a one ETF portfolio is great because it takes the guesswork out of investing, and especially for beginner investors that don't want to spend a lot of time researching different stocks and index funds to buy, having just one ETF that you can continually buy over time every time you have money to invest in the market is really a great strategy. Now, what are we looking for when we're trying to find the best single ETF portfolio out there? Well, there's a few things, and all of these will actually apply to every single ETF that we're going to assess today. But generally speaking, we want an ETF to have a low expense ratio and low management fees. So something like 0.1% would be good, or even less is better, unless maybe it's an international ETF, in which case sometimes the fees are a bit higher. The second important factor we're looking at is diversification. And especially in the case of the one ETF portfolio, we really want something that has investments spread out across different companies, different sectors, different markets. And the third major thing that I'm looking for in an ETF is that it has a reasonable amount of assets under management. And the reason for this is that there is kind of that sense of safety in numbers. And if we're investing in an ETF that has a market cap of something like $10 million, well, there is just a little bit of extra risk there that if something goes wrong, there's really not that much liquidity to allow you to get out. But with massive ETFs that have billions of assets under management, you know you'll always be able to buy and sell them, no problem. Now, in some cases, I also look at dividend yield, but it depends on the investing strategy, and we'll get to dividend ETFs in a minute. So considering all of this, what is the winner in the one ETF portfolio category? Well, I am saying that it's XEQT. XEQT is the iShares Core Equity ETF portfolio, and it tracks companies all around the world. So looking at the key facts of this ETF here, you can see that the number of underlying holdings is 9,695. So that means every time you buy one share of the XEQT ETF, you're buying tiny fractional amounts of almost 10,000 different companies all around the world. Now, in terms of the management fee for this ETF, it's 0.18%, which is a little bit on the higher side. Obviously, it's still really low, and it's great compared to, managed portfolios or even mutual funds, but it's a little bit on the higher side because it deals with international companies, and so it requires a little bit more work. In terms of where this ETF invests, it has almost half the portfolio in the US, a good chunk, 23% in Canada, and then established developed markets around the world, including Japan, the UK, France, and even a small bit of exposure to China, 1.54%. Now, the one-year performance of this ETF has returned about 15.6%, which is pretty great, especially considering how diversified this portfolio is across nearly 10,000 companies. And so if you're looking for one single simple ETF investment that you can make month after month and know that it is going to be a broadly diversified strategy and it's going to have solid returns over the long run, then I think this is a good option. Now, there is a runner-up, which is VEQT. It's the Vanguard version. It's very, very similar, but it has slightly higher management fees than XEQT, which is why I personally prefer this option. Okay, the next category of ETF that we're going to look at is Canadian markets. Now, there are tons of options for ETFs that track different segments of the Canadian markets or that track the entire Canadian market, but one option that I like is XIC. This is another ETF from BlackRock, which is one of the largest investment firms in the world, Vanguard being one of the other ones, and this is the iShares Core S&P Total Market Composite Index. So this tracks the total Canadian market. The number of holdings in this ETF is much lower than XEQT, for example, with only 228, but obviously that's still very, very diversified. And if you were going to go out and buy individual shares of 228 companies, that would take you a very long time. This is a nice, easy, convenient way to invest in the Canadian markets. The fees for this ETF are very low at 0.05%, which is great. and that's pretty much as low as you're gonna see ETF fees anywhere. And if we look at where this ETF is invested, you can see there's a lot of financials because there's a lot of big banks in Canada. Also, the energy sector is pretty highly represented because there's a lot of oil and gas and other energy companies in the country. And so if you're looking to build up your own ETF portfolio and you want to allocate a certain amount of it to the Canadian market, I think XIC is a good option. But another runner-up is the Vanguard version, which is VCN. The only reason why I prefer XIC is that the share price of VCN is slightly higher. This one trades at 32 and VCN trades at 41. So it just means it's a little bit easier to dollar cost average into XIC. And also the number of stocks held in VCN is slightly less as well at 176. So it's just slightly less diversified. Realistically though, you couldn't go wrong with either option. Now let's move on to the US market. So this is what I was talking about before, because there's options of ETFs that trade in Canadian dollars, but where you can invest in the US market, which is a great option for Wealthsimple because then you don't have to pay the 1.5% exchange rate fee. And so in my opinion, one of the best US market ETFs on Wealthsimple is XUU, which tracks the total US market, not just the S&P 500 index, although we'll talk about that in a second, but the total US market. There's 3,262 companies that are held within this ETF. So that's going to include all of the big ones like your Apples, Facebook, Amazon, Tesla, all of that. But then also some mid-sized companies and even a few small cap companies as well. The fees for this ETF are 0.07%, so slightly higher than the Canadian one, but still very low and less than 0.1%. And if we look at the sector breakdown, you can see that there's a lot of tech companies in this index, as well as financials and healthcare. So there is a little bit of a different distribution to the Canadian index, and a diversified portfolio would probably want to have some exposure to each. Although realistically, anybody that's a serious investor needs to have a pretty significant percentage of their portfolio invested in the US market, and XUU is a great option. However, if you wanted to have possibly a more concentrated strategy, then you could also invest in something like VFV, which only invests in the Vanguard S&P 500 index, which tracks the 500 largest companies in the US. The management fee for this ETF is slightly higher, but really a negligible amount at 0.08%. And you can see with 506 stocks in this ETF, it's much more highly concentrated in the largest companies. And sometimes this will actually be a good thing and other times it won't. Sometimes the extra diversification of XUU will diminish your losses if there's a downturn or if something bad happens to a certain sector. But on the other hand, if things are going well and it's a bull market, then VFE might have better long-term performance because it's more concentrated in some of the largest and highest growing companies. Okay, next up is international ETFs. What are the best ETFs on Wealthsimple if you want to invest in countries aside from Canada and the US? Well, there's two options that are pretty similar, and in my opinion, they're nearly equivalent. I like Vanguard VIU, which invests in developed markets all around the world, excluding North America. The management fee is slightly higher than the other ones at 0.2% because it is an internationally focused ETF. But it's very diversified at 3,863 underlying stocks. These companies are mainly from Europe and Australia and Asia, including Japan and Korea. And so if we look at some of the actual examples, you can see we have Nestle, we have Samsung, we have Novartis, we have Shell, we have Toyota. So lots of household names that I'm sure you're familiar with. And these are the types of companies that you wouldn't get exposure to if you were just investing in a US market ETF, which is why it's probably good to have some exposure to international companies in a widely diversified portfolio. Now, the other option I was telling you about that's quite similar is XEF, which is the BlackRock version of the same thing. It has the same fees, however, it is slightly less diversified. But here actually you can see a map of where they're investing. So, mainly Europe, Oceania, and then Asia. The next category we're going to look at is dividend ETFs. So these are ETFs with a focus on paying out dividends. Now, I should probably mention that all of the other ETFs that I just talked about also do have dividend yields, but this one is going to have a much higher, more elevated yield. The other ones were really not focused on dividends, and the primary goal of investing in those index funds would be to see growth of the equity over time. But for dividend ETFs on Wealthsimple, to keep things easy, because there's different tax implications depending on where the company is located that's paying you dividends, I'm only looking at Canadian dividend ETFs. So what do I think think is the best Canadian dividend ETF? Well, I'm going to go with XEI, which is the S&P TSX Composite High Dividend ETF. Now, this one is slightly less diversified than the other ETFs we've been looking at. It only holds 75 companies. And the management fee is 0.2%. So it's again slightly on the higher side. It's in line with what you would pay for the international ETF. But the distribution or the dividend yield as of the time of this recording is 5.15%. And the 12-month trailing yield, so the average yield over the last 12 months, is 5.18%. So that is a very high dividend yield. Now, this ETF is heavy in the financials and the energy sector. You can see the top companies here. You got energy companies, and then you got banks, TD, RBC. There's also TELUS and Bell, so you have those telecommunication companies in there as well. And this ETF is a good option if your focus is on income from dividend-paying stocks. Now, as a runner-up, there's another option that I want to mention, which is CDZ. And this is a little bit on the safer side because this is the Canadian Dividend Aristocrats Index. And what a dividend aristocrat is a company that continually over a long period of time, 25 years or more, always pays a dividend and generally increases its dividend every single year. So this is going to be a little bit safer than the other one, although it does have a slightly lower yield. Now, moving away from safer investments, let's talk about growth ETFs, specifically high growth ETFs, because there's some good options on Wealthsimple if you're an investor that has a higher risk tolerance and wants to go aggressive on a strategy to try to see more explosive growth in a shorter period of time. And one option that I like for this purpose is ticker symbol ZNQ, which is a BMO, Bank of Montreal ETF that tracks the NASDAQ 100 Equity Index. So basically the 100 biggest, best performing companies on the NASDAQ, which is an exchange in the US that's focused on tech companies. And these are really going to be high growth, high risk, high reward companies. The management fee for this ETF is on the higher side at 0.35%. But if we look at the performance of this ETF, it has been gangbusters over the last year. And in fact, the 1 year performance of this is over 30%. Now, obviously there is risk associated with this because if we see a big recession or a crash, especially in tech companies, then this ETF is really going to get hit hard. Now, runner up for the high growth category is a TD ETF, ticker symbol TEC. And it's very similar, except it also invests in some international companies. The year-to-date performance of this ETF is 43.83%. But you can see this massive red candle here from 2022 when it went down over 32%. And so that's the game you're playing with these high growth ETFs here. And the final category is cryptocurrency ETF as we continue our march up the risk scale, because this is pretty much as risky as it gets. Now, there's a couple of options in this category, and I'm going to break it down for you. For starters, there's the Purpose Bitcoin ETF, which I think is a great option if you want to get exposure to Bitcoin through a financial product and you don't want to actually hold Bitcoin itself. This is the largest Bitcoin ETF in Canada, but really the issue with this is that the management fee is 1%, which is quite high. However, it really does make buying Bitcoin easy. You're not responsible for holding it yourself, and you can actually invest through tax-free savings accounts or RRSPs in this ETF, which is a nice benefit. Now, there's a similar purpose ETF for Ethereum. It has the same management fee of 1%, and this one tracks Ether as opposed to Bitcoin. And the final ETF that I want to mention here is from Evolve, and this is a joint crypto ETF. It's actually Bitcoin and Ethereum lumped into one, and this is packaged under ticker symbol ETC. Now, there's pros and cons to this. For starters, it's a pro that you can invest in 68% Bitcoin and 31% Ethereum with one single easy investment product. However, the cons is that it's a very small ETF. It only has 18 million in assets under management. There's not as much liquidity, but I do think this is a decent option if you wanted to allocate a small percentage of your overall investment portfolio to cryptocurrency. So that is my opinion on what the best ETFs on Wealthsimple are in these 7 categories. Hopefully you found this video helpful, and if you're interested in signing up for Wealthsimple and getting started trading, I'm going to throw my link down below. If you sign up with it, you'll get a $50 bonus and I'll get a $50 bonus. Win-win. Thanks so much for watching and have a great day.